So the transition here is usually when the forces are still disinflationary and growth is slow to picking up. That is like macro utopia. Why? Because that tends to push the central banks into adding liquidity and the governments to adding liquidity. It also happens to be, this everything code cycle is also about the election cycle. And guess what politicians do at this time as well? They want to give candy to the kids. So they're stimulating as well and tend to stimulate into the following year as well. So that particular juncture of the macro starting to pick up, the ISM survey is still below 50, so it's still sluggish. The forward-looking indicators are all very positive and liquidity has been positive for a while. That pickup, if you think of it, we've had a Wall Street recovery, which is liquidity. Main Street recovery is yet to happen. Main Street is when earnings go up, and all of our earnings go up, and there's a bit more money around. That's when the flows from all of these earnings start going into markets as well. So it's not just liquidity and debasement driving things, it gets driven by actual investment money, which has been actually quite lacking in many respects. So that's typical of the crypto summer. So the crypto summer starts around now. It also forms the basis of the banana zone. And that's when things start to get really crazy. If we go back and look at all of these, since about 2008, they've all done roughly the same thing, which is presidential election cycle. It kind of has a sell-off into the summer, then it tends to accelerate sideways over the election because everyone doesn't know what it means, and then it's all over, markets rip. Whatever the outcome, a shock, expected result doesn't matter. And so that election cycle has been very prevalent both in equities and in crypto. So that's where we are in the cycle now. So we're just in that zone of, we've got this beautiful chart pattern that is just consolidating. The stuff that has less network traction or network adoption has fallen significantly, but we're starting to see the recovery. So I think it's only a matter of time now before we start to see the next move. And that's also likely to coincide with some other liquidity things. I think the Japanese have to intervene with the blessing of the Fed, because that's going to help the Chinese, the Japanese, everybody's business cycle. That has to come because the US dollar is far too strong for this point in the cycle. The other thing that needs to happen alongside that is the Fed absolutely have to cut. And I saw you talking on Twitter today. Look, inflation, the true inflation numbers are 1.82. Core CPI is now headed lower sharply, but rates are at 5.5. It makes no sense considering the lag that it has. If not, they're going to undershoot inflation, which I don't think they mind because you can refi debt at lower levels. The Fed only operate on two things: unemployment and inflation. Both of those lag the business cycle itself. So unemployment, owner equivalent rents part of CPI, which is the large part of it, all of that stuff lags by 15 to 18 months. So even where the ISM today is bottoming, that means that doesn't bottom until next year sometime, which is why the Fed are always cutting into the second year, because they're following the lagging indicators, the things that drive down CPI, which is why they're always late tightening. Unemployment, well, you're at the point in the cycle where unemployment ticks up. I don't expect a big tick up, but 4.5 through to maybe upside of 5% unemployment. Well, if you think of how lagging unemployment is, it's about 12 months lagged. So again, that keeps the Fed cutting, even though the business cycle is going to start gaining strength. So you'll have a weird world, and it happens at every single cycle, where the ISM's at 55 and the Fed is still cutting like crazy. And everyone's like, what the hell is going on? Yeah. It's because they just follow those two indicators and they're both lagging. Mm-hmm. And we live, in Global Macro Investor, Julian Patel and myself, we live in the future by 9 months because we use financial conditions, and financial conditions lead the ISM, and it's been screaming higher for a while. Don't assume central banks are stupid. That's a lesson I've learned. Assume that they know what they've got to do. If the game is, we need to roll $10 trillion of debt this year, and the Europeans have to, and the Chinese have to, and the Japanese have to, and everybody else, the best single thing would be to lock that in for another 4 years at the lowest possible rates. So it's kind of like, maybe there is a game here, which is to undershoot. I've observed that they're all in cahoots with each other, all of the central banks, plus all of the governments. So there's no independence of central banks. They're all working together. You can see how Janet Yellen and Jay Powell operating the TGA, the reverse repo, they're completely working together. Same in Japan, same in China, same in Europe. Everybody's doing the same thing. So I kind of think if they're doing it late, they're doing it on purpose because they're not stupid. They can see the same models. What? My work is better than all of the people at the Fed? No, they're choosing to do it for a reason. I noticed that Yellen went to China twice. Right. Well, what's she doing in China? It's something to do with their debt refinancing cycle because they need dollars because their entire property sector is a dollar borrower. Right. So they've got a dollar shortage. There's a global dollar shortage going on. It started Silicon Valley Bank, all of that rolls into Credit Suisse, blows out. Credit Suisse, big part of the Eurodollar market. Then the Japanese banks, they're the epicenter of the Eurodollar market. What's happening is they're starved of dollars. So dollar yen starts falling. And then Yellen goes to China twice. So Yellen needs to orchestrate this little dance. The dance is using Japan to scare the Chinese to do something. The Chinese don't want to devalue. Janet doesn't want to lend directly to the Chinese in swap lines. So she's going to backdoor it via the Japanese banks by getting the Japanese to intervene. That's how I think it plays out. The Chinese, on the other hand, will have agreed the other thing because Janet is the world's largest junk bond saleswoman and she needs them to buy bonds. So she's like, I will get you the liquidity. We understand the Eurodollar market is in supply shortage. We will give you the liquidity via different routes. You will add to your treasuries. We can all go away. And then we've seen the trade deals trying to happen where they're trying to say, listen, the US can't run such a big deficit. Everyone has to kind of realign here or we won't get enough growth. Everybody needs that growth. A weaker dollar is the mechanism for the world to grow. Every business cycle, up cycle, is all about a weak dollar cycle. It sloshes money into emerging markets. China desperately needs it. The US needs to export goods and have people buying them. Chinese won't buy any goods because they're in a recession, essentially. It's all of this dance at the bottom of the business cycle. Feels like it's going to get resolved. And the only way I think it gets properly resolved is the Fed need to cut, lower the interest differential, kind of shock the market, maybe July. I think you mentioned on Twitter today. I have a tendency to think July or a strong signal it's coming.